in investing. It's one of those things where it's just critical. Now, another thing that distinguishes an andesite blue bond from other investments is we do not charge our investors any fees, no fees, zero fees. We just don't believe in charging our investors fees. Now, I know many of you have talked to maybe private equity deals, or you've talked to hedge fund guys, and you know how those guys are. I mean, they're great guys. I'm friends with a lot of them, but you know, they love those fees. The first thing they're going to do is tell you about the 2 and 20 fee and this fee and the carried interest provision, and they will have that thing so loaded up with fees. But you know what they don't mention a lot of times is that on private equity, yeah, it sounds great. You might make a lot of money, but 1/3, 33%, 0.3, a third of private equity deals completely fail. The other third, they just break even. And then the last third, they actually make money. So yeah, the returns may look a little bit higher, but with an andesite blue bond, you're going to have a good chance of getting not only passive income, but being able to benefit from all of the things that are going on here. And you're not paying any fees. So that's important. We also offer flexibility on interest payment. Now, I want to make it even more clear. Many of our investors are from the United Kingdom. So, you know, they're kind of in a situation where they're thinking about, well, maybe I should just buy a gilt for passive income. A gilt, for those of you not from the United Kingdom, is just a bond, a government bond. And I've got a chart here that I want to make it crystal clear the difference between buying a corporate income bond with andesite blue, where you're going to earn a lot more, hundreds of basis points more than a gilt, versus buying a gilt. And I'll just show a short clip here. At the United Kingdom's 30-year gilt yield, and then compare that with andesite blue. And I'll give you a hint. Andesite blue has much higher yields. So let's go ahead and look at the long-term history here. We can see that the highest that yields were in the United Kingdom was around 16% back in 1981. And then the general trend is it has gone down. The yield has decreased in value over time on the UK gilt. So if we go all the way to it looks like about May of 2020. It was even a little lower there. We can see that, you know, you had some very low. Here's a yield that was as low as 0.52 back in April of 2020, and then it's gone up. But to put that into comparison, we are offering a yield that's around 7.15 to 8.85. So let's just call it 8 approximately. To get an 8 yield, to get an 8% yield, you would have to go back in time to if you compare it with a gilt, you're looking at the last, it was around an 8% yield was around, let's see, when was it here? It was a while ago. To get an 8% yield, you had to go all the way back a long time to get that. It would have been somewhere around the 90s. So it's something to keep in mind that with andesite blue, we are able to offer a return that's around 8%. And the UK gilt has not done that in many years. So just please keep that in mind when you're trying to decide between bonds that are gilts and andesite blue. Fantastic. That's a big advantage, the fact that you can earn so much more passive income with our corporate income bonds. Now, let's talk about how the bonds actually work. Well, we offer passive income bonds to high net worth accredited investors and institutions in the United Kingdom and throughout the world. The net proceeds of the bonds are used to invest in Ukraine with projects that have been reviewed and passed all due diligence. We have a very extensive due diligence process. Our local Ukrainian management company collects rent and oversees management of the loan portfolio. So we make it so simple. What kinds of investments? What type? Well, we invest into the healthcare industry. We invest into things like surgical clinics, dental clinics. We invest into real estate, agriculture, green energy. We have a lot of exciting projects that we'll be talking about, and I'll show you some examples, but the returns are so ideal because you can place any amount. Say you decide to go with our suggested minimum, but we can work with lesser if you want to do something smaller. But we suggest 100,000 pounds. You get a 36-month bond. Say you want to be paid quarterly, you will earn 7.15%. And you will earn that over 36 months. You'll be paid $21,450 in interest, and then you'll get $100,000 in principal back. But say you want the maximum, say you want the absolute highest return. In that case, you could select the payable on maturity. That bond is for 60 months. And if you were to do the payment on maturity, you would get the highest return. You would earn $55,659 in interest, and then you would get $100,000 in principal back after the bond matures. So who should and why should I invest in the bond? Well, I believe that an investment in the bond is suited to investors that are seeking an above average rate of return on their investment. If you're the type of investor that wants an above average rate of return on an investment, Andesite Blue emerging market corporate income bonds are able to deliver a return that is hundreds of basis points more than gilts. If you prefer the security of a bond that is asset backed, when we do our loans, we use the gold standard. So we are looking at the asset, making sure that the loan amount is a low enough amount. So it is something where we can then provide passive income and there's a margin of safety. How long-term is the bond? It ranges from 36 to 60 months, but here's the great part, folks. Let's say that your bond is maturing. We give you plenty of notice. We call you, we email you, and we send you a letter. And let's say that you don't want the money back. Say you just want to let it keep working. We can automatically renew that bond for you on an annual basis. We do that as a convenience for our investors. And of course, if you want the money back, we just give it back to you. But some investors, they're at a point where they want to let it keep going. And we are in a position here where for years and years into the future, we can provide you with passive income with these bonds. Another question that we sometimes get asked is, can I put the bond into my self-invested personal pension, SIP? Well, good question. Good question. Actually, the answer to that is it is subject to the approval of your SIP provider. But folks, I want you to, if you talk to your SIP provider and they don't understand this and they don't really understand how it works, come and they tell you something like you can't do it, please, folks, call us back. We know a lot of other SIP providers and we can put you in touch with one that understands our financial product and they can help you with getting into this investment because it's something that is so important. What type of investment is it? It's a corporate income bond. So, okay, who can invest? Well, the first requirement is that you must be over 18 years old. And I have some great news just looking at the faces of the audience here today. Every single person is going to qualify on that alone. If everybody here looks like they're over 18, so I think we're safe. You also could be a trust